Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update today about the economy and the investment markets so you can better your portfolio in a manner that's prudent within your goals and objectives. You know, every single week we get a lot of phone calls and we get a lot of email questions, which we love to get, obviously, about financial topics. Our radio show continues to be a huge success, and if you haven't listened to it or you don't listen to it often, try and do so. We do give a lot of good update information every single Sunday from 10 to noon throughout Florida. In fact, we just added another 3 different stations to Florida, which we'll be sending out a press release shortly. One of the things I want to talk about today, though, is primarily, again, about the inflation factor within a portfolio. We're starting to see inflation come back. You know, there's people that are looking for hyperinflation. There's people looking for deflation. I'm in neither camp. I'm really in the inflationary camp, more about a modest inflationary environment between 4 and 6%. Now, 4 and 6% is modest compared to people looking at 8 and 10%. Certainly higher than our average inflation that typically the government likes to keep it around 2 to 3%. So 4 to 6% inflation will create some problems for certain sectors of the investment market, primarily long-term bonds as rates continue to move up. We are seeing in the gold market, which we are watching extremely close, we were looking at kind of a temporary bubble scenario in gold and especially in silver, which really went up parabolic rates in the last year and a half. And we're looking for a pullback. If we do get a significant pullback in gold in the short term, say in the 15 to 20%, we would probably add to some of the gold miners, primarily, not just the actual precious metal, but the gold miners, which I actually like better. We're watching it close. If we see actually some of the gold miners and actually some of the gold actually break out to new highs, we actually may be tempted to go in earlier, and my pullback theory may be off. So we do watch this on a regular basis. I like the gold miners and I like the precious metals simply because of the inflation factor. Commodities are the other driver. We're seeing oil prices obviously at new record highs over the last 2.5 years at around $112 a barrel. We're seeing inflationary impacts on that. That will have a dampening effect that primarily on the U.S. economy, in my opinion, and fully developed nations like Europe and things of that nation, or that example like England. I think some of the emerging markets are going to continue to do well, I'll be honest with you. We're seeing really the beginning stages, let's say on a scale from 1 to 10, we might be at a 3 to 4 scale on the emerging markets, in my opinion. On the long term, which we're going to have some volatility on the short term, but on the long term, really an opportunity in that horizon. We continue to like those. We continue to hold positions in South Korea. We continue to hold positions in China. We are looking at a couple other areas, although I'll be honest with you, they've had some fairly weak relative strength, some of the other emerging markets, which is will happen when you have big run-ups like we did back in 2010. So we monitor those. One of the things that I always try to stress is risk management is one of the most important parts about money management and actually having an investment strategy, which we continue to get a lot of questions and calls on. Let me kind of give you a couple examples that we talk about. As a money manager, now we're not a stockbroker, we're not a so-called advisor, we're an actual fee-only registered investment advisor in a money manager capacity. What that means to our clients is we actually manage their money. We call the shots, we continuously research and make those adjustments when necessary automatically for our clients, where a so-called advisor or broker doesn't do that. They simply sell investments. We do have a disciplined investment strategy, and I tell all investors, if you're managing your own money or you're using somebody, if you're not using a registered investment advisor in a money manager capacity, then you do not have an investment strategy in writing and you don't have any investment strategy at all. That's extremely important because part of that investment strategy is going to be risk management, because we will go through a recessionary environment again. One of the things that I think we are seeing right now, by the way, is more of a new normal, where we used to get recessions over the last 2 or 3 decades, about every 6 to 7 years. I think we're going to go back more into what we saw in the 40s, 50s, and 60s, which is more of a recession about every 3.5 to 4 years. So what we're going to see is we had a recession a few years ago. We're going into the growth phase coming out of that recession. I believe we have a chance for another recession, or at least a lackluster economy over the next year to year and a half coming up. Those are the things that we are looking at. I believe that the new normal is going to be the old normal, like I said, from 30 years ago, where you get recessionary environments and growth spurts that basically average about 3.5 to 4 years each. So you're going to see a little bit more ups and downs in the market, and that's really where that investment strategy and prudent risk management will come into your portfolio that I believe is extremely important. So again, if you don't have an actual strategy in writing, so if you're using somebody now and they're not a registered investment advisor and you haven't signed an investment advisory agreement, you don't have a money manager. You're dealing strictly with a broker who uses a title of advisor. You need to have a registered investment advisor, and if you don't have a signed registered investment advisory agreement, then that means you don't have a money manager. Also, if you don't have an investment strategy in writing, it means you don't have an investment strategy at all, either yourself or the person that is helping you with your money. Make sure you have a written investment strategy so that you know what are your criteria for buying, what are your criteria for selling, because without that, you're basically like going on a big trip without any road maps or a GPS system in order to get where you want to go. You don't know where you're going to end up. An investment strategy is extremely important, and part of that investment strategy is going to be risk management. Also, and I talked about this just a little earlier, is oil. I believe we're going to see pressures on oil on the upside. We're going to continue to see renewed inflationary fears as the world economy gets a little bit better, and more importantly, as the emerging markets continue to expand, which they are. That's going to put more demand on oil, and I continue to see higher oil prices in the future. If they get too high, around the 120 to 125 area, that will put a dampening substantially on, again, the developed nations like the United States. So if you're in primarily large cap stocks, I think those are going to be the area that are going to be the weakest, and I think areas of, especially the U.S. market, that right now that we own a sizable position for our clients, are small and mid cap stocks or equity based investments, which I think will be the bigger recipient if oil prices do go up higher, because they have an easier chance to basically raise their prices in correspondence with that, and small and mid-cap companies can be more flexible. This is Brian Resney with the Resney Wealth Report. Make sure you do listen to my show this Sunday from 10 to noon. And as always, if you'd like to talk to us about your portfolio, if you're finally realizing you don't actually have a registered investment advisor or money manager that's actually helping you manage your portfolio, and you'd like to talk to us, we would love to talk to you. Call our office. We'd love to sit down with you, build a portfolio that's prudent for you with an actual strategy, investment strategy, active risk management that will help, in our opinion, better your retirement and keep you on track in good times and in bad times. This is Brian Resney with the Resney Wealth Report. Have yourself an extremely profitable day.